Welcome to Fomo Consulting for your daily AMC stock analysis on Saturday, April 17th. Today's topic will be, why is Cinemark Holdings outperforming AMC in the stock market? After we go through the video and the data, it is obvious we are winning. We are winning the battle. So hopefully you'll find this video entertaining and informative, and if you do, please like, share, and subscribe. Let's get into the video. So let's look at how they compare just from a business standpoint. Go through a few comparatives here. So AMC has a little over 1,000 theaters internationally and in the United States, with a little over 11,000 screens. They are heavily vetted in the United States and the European countries. They have over 8,000 screens in the US and Canada alone. They have multiple brands, obviously, AMC Dine-In, AMC Classic, fantastic company, great place for the family, night out with your significant other. Some even have, bars and again, dine-ins. Great business. Currently, as I can tell at the recording of this video, they are 99% open, albeit limited capacities in municipalities and states, but that is increasing daily due to COVID and the lifting of restrictions. Again, the research shows they have a little over 14,000 employees, and the company is a little over 100 years old, so obviously a very successful company. So Cinemark Holding has a little more than half, a little less than half of AMC at 531 theaters, little under 6,000 screens worldwide. Going through the research, I was surprised to see that obviously they're in the US, but also very strong in 15 Latin America countries. That was very surprising. They have 331 theaters, a little over 4,500 screens in the U.S., based in 42 states. They have multiple brands within their umbrella under Cinemark Holdings. Again, a very strong company, a close competitor to AMC. Most are opening or open. There are more that I'm finding that are opening late April, early May, due to COVID restrictions in the various states and municipalities. So that is great news for Cinemark, great news for the industry. I think it's only going to bode well for AMC as we go through the next few months. With Hollywood blockbusters stacking up left and right, I think we're in store for a fantastic summer movie season. They have a little over 11,000 employees that I could document, and they were founded in 1984. So both companies are very strong. So let's look at the basics from a stock price perspective and compare the two. So AMC closed down Friday, April 16th, down 5.61% at $9.33. Tough day, a lot of short pressure. It was clear they wanted it below 10. They certainly forced it below 950. We did bounce off that $9 support area and did grind our way back up throughout the afternoon and did find consolidation. So I was pleased how the second half of the trading day went for AMC. Cinemark closed at $21.26, down 2.34%. Therein lies the question, right? Why is Cinemark priced so much higher than AMC? It is quite clear as we go through this video as to why, but in my opinion, not financial advice, that AMC should at minimum be trading around Cinemark Holdings price point, if not higher. Both are recovering, both no doubt are carrying debt, but it is quite clear AMC is being suppressed. So market cap 4.21 billion for AMC, 2.5 billion for Cinemark. Another thing I found quite surprising, because I haven't done a lot of research on Cinemark, is their 52-week high was $27.84. Their 52-week low was $7.56. Look at AMC, where it was beat down below $2 after COVID, and even with the quote-unquote baby squeeze in late January, where we got to $20.36. It is quite clear to me, and a bit surprising, but it is clear that AMC is being shorted heavily. It is being suppressed. It is here in the numbers. So let's look at the charts. So this is AMC Entertainment's chart for the last year, beginning March 1st, 2020 to yesterday's close. So a couple key points. Obviously, this documents very well just in the charting, the COVID-19 crisis, the shutdowns throughout the country of the United States and the world, and the stock price, like many in those are the early days of COVID, the stock price went down substantially. Where it found its bottom, right around $2, and then recovered back and hovered around that $5 consolidation. Prior to the squeeze with the Wall Street bets phenomena, all the apes and the diamond hands, prior to late January, we have made a recovery. And as you can see, we've kind of found a support at $9, $9.20 in that range, $9.30. So that is the chart viewpoint from AMC for the last year. So let's look at Cinemark. So it's quite clear Cinemark, again, they took a harder dive with the shutdowns due to COVID in early March. However, they have steadily increased really since late fall, early winter, and they've kind of climbed the ladder back up to where they currently are in the low 20s. That is not by accident, I do not believe. Again, this is my opinion, not financial advice, but you can clearly see by the green arrow, it's been on a pretty healthy trajectory pretty much since the fall, winter, and early spring. So let's look at why this may be occurring. So this is the reason why I believe AMC and Cinemark are behaving so differently on the stock market, really for the last 6 months, possibly a year, but more importantly, recently. So in 2020, the annual revenues for AMC Entertainment were $1.24 billion, obviously way down due to COVID. Their net profit was a negative of $4.59 billion. Alternatively, Cinemark had revenues of $686 million with a net loss of $616 million. So if you ask yourself, if you're a shorter, which company looks like the bigger target? AMC. Bigger loss, bigger hill to climb. Leadership was doubtful about being able to keep the company afloat and out of bankruptcy. They were a target, and I truly believe, looking at charting previous to COVID, they were under heavy attack prior to that. But again, that's just my opinion. Shares outstanding, again, I haven't done a lot of research on Cinemark, so this was a little eye-popping. 450 million well documented with AMC, 118 million shares outstanding with Cinemark. The big difference in that equation is the institutional ownership. Retail with AMC, all of apes and diamond handers and scalpers and you name it, we own 80% of the company of AMC. There are 371 institutional owners representing 52 million shares. That is a big difference between Cinemark. Cinemark is primarily institutionally owned. As I could tell, not a lot of retail traders. Now, prior to COVID, prior to the big drop-off, there may very well have been a large retail presence, but I do believe that during that transition and that sell-off, institutions saw something much stronger in Cinemark and began to support it. Again, there are 626 versus 371 institutional owners in Cinemark versus AMC, equating to 136 million shares. That is more than the shares outstanding. Based on my math, it was about 108, depends on where you want to look. Do your own due diligence. Hopefully you'll find something similar. If not, please put something in the comment. Where I believe the real action is, and the big difference in what is separating us so greatly in the price action is this. As of Friday, April 16th, the total volume for AMC was around 40 million. Short volume was 14.9 million, or 36.96%. So basically 37% short volume. The borrow fee has spiked and increased daily all week long to 18.29%. Ridiculous. Very high. Short shares available is 1 million versus Cinemark, which only had a total volume of a little over 2 million on Friday, with a short volume of 15.72% or 329,000 shares. The borrow fee was only 0.26% versus 18.29%, with a similar short share availability of 1.2 million. Ladies and gentlemen, that is why Cinemark is priced so differently than AMC. They are shorting us to death. We know it. It is clear. That is where the fight is. But I also see where Cinemark is where the fair market value, if not greater, that AMC should be. But it is clear that this company has been shorted, continues to be shorted heavily, although all of the factors in play with the new rules, the regulations, DTCC, NSCC, SEC, margin calls, all of these factors are really starting to build the pressure up. They are not going to pay an annualized fee of over 18% much longer. The covering, in my opinion, not financial advice, the covering will begin soon. It's only a matter of time. So ladies and gentlemen, I would like to read a brief quote. It states, "This is no time to ease and comfort. It is time to dare and endure," from Winston Churchill. I believe we are daring to make change. I believe we are daring to challenge the establishment. We are daring to change our lives. All the while, we need to endure. Endure the attacks, endure the FUD, endure the process, and I truly believe we will come out victorious. I truly believe we are winning. Ladies and gentlemen, thank you so much for watching the video. I hope you found it informative, entertaining, and if you did, please like, share, and subscribe, and I hope your lives are full of green candles. I hope you have a great weekend, and we will see you soon.